Today, the UK's privacy regulator starts looking into Worldcoin's iris scanning technology. A new government report says the US lacks legislation to clearly regulate crypto. And the founder of Delta blockchain fund, Kavita Gupta, breaks down what a new bill focused on DeFi protocols could mean for VCs in the space. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices stabilizing after yesterday's losses, but still weighed down ahead of the Fed's next rate decision. At noon Eastern, Bitcoin traded below $29,200. Ether traded just under $1,860, while XRP rose to 70 cents, still holding on to some of the gains made after the ruling in the SEC court battle. Let's talk about some of the top stories. The UK's privacy regulator is looking into the launch of Worldcoin. The Information Commissioner's office told CNBC, quote, "We note the launch of Worldcoin in the UK and will be making further inquiries." The office also said that organizations must conduct a data protection impact assessment before any processing that is likely to result in high risk, like special category biometric data. Worldcoin is the crypto project by OpenAI CEO Sam Altman, where users provide retina scans and receive a digital identification and free cryptocurrency. The service rolled out on Monday after adding 2 million people during its initial trial run. The project has already faced criticism from the likes of Vitalik Buterin, who raised privacy concerns over how much information someone might be giving away by scanning their irises. We reached out to Worldcoin for comment on the UK's inquiry, but haven't heard back yet. Next, Middle Eastern crypto exchange Rain just obtained a license to operate in the United Arab Emirates. The exchange, which is backed by Coinbase's VC arm, announced on Twitter that the Financial Services Regulatory Authority in Abu Dhabi granted the first license to operate a virtual assets brokerage and custody service to Rain. As crypto companies have been rethinking their strategy in the US amid a regulatory crackdown here, the Middle East has emerged as one of the new hubs attracting talent. And finally, a new government report finds that the US needs clear legislation to close gaps in crypto regulation. A report from the Government Accountability Office says no federal financial regulator has comprehensive authority to regulate the spot market for crypto assets that are not securities. The GAO also says that Congress should consider legislation for non-security crypto assets and stablecoins. Congress has yet to move forward with crypto legislation since the collapse of crypto firms like FTX last year. Sticking with crypto legislation for our main story, several bills with a focus on crypto have been introduced recently, one of which is bipartisan legislation requiring DeFi services to meet the same anti-money laundering and economic sanctions compliance obligations as other financial firms. The goal? To try and prevent crypto-facilitated crime. Crypto World's Talia Kaplan spoke with Kavita Gupta, the founder and managing partner of Delta blockchain fund, to find out how this bill could impact the investment strategies of VCs in the space.
Recently, we've been hearing about several bills aimed at providing a regulatory framework for crypto in the U.S. Earlier this month, Senators Lummis and Gillibrand unveiled their revamped crypto bill. And just last week, House Republicans introduced a new digital asset oversight bill. Also last week, we learned that the Senate is getting ready to take another stab at regulating the crypto industry with a new bill that would place stringent anti-money laundering requirements on DeFi protocols. I read that this new bipartisan Senate bill, in some cases, would hold venture capital firms and other large investors accountable for sanctions violations taking place on DeFi platforms. Your fund is an early-stage venture capital fund focused on blockchain technology and decentralization. So I'm curious to get your reaction to this bill. What does it signal to you?
Thalia, my first reaction and the biggest question is, what are regulations? How are you sanctioning and what are the basis of the sanctions? I think you and me have talked about this multiple times in the past. We really would love to have regulations so that we are in a very clear idea of what is right, what is wrong. If we don't think something is right, at least as an industry, we can come together and question SEC or CFTC or Parliament, like Senate or government, like whatever is the right authority to question, like the way Ripple case has happened or Coinbase case is happening. But right now, my first question to the whole bill, and I went through every detail, all the 25 pages, the question is, what are you sanctioning and basis of what? So are you sanctioning that we are doing yields on DeFi, but when was it said that that's not acceptable? Are you sanctioning that in case we hold any of the tokens which has been deemed as security, but what are the basis for deeming them as a security and what when are you going to tell us that something which I did 2 years back is not going to be a problem 2 years later? So those are my first reaction, like the lack of clarity or direction, or even a lack of direction going forward by SEC, who clearly wants to who wants to be a regulatory body for this, is what is completely confusing me. And I don't even know what to do with the bill. If it passes, first of all, it's a proposal. It's not something which has been passed and has been implemented, and tomorrow onwards we have to live with it. I think even I'm very grateful to have this conversation started. But where I am is like, tomorrow if I wake up and I say, hey, Talia, blue is banned from tomorrow, I think, and we're going to talk about this. What does that even mean for you? Are you going to like stop endorsing or looking amazing in blue? That's how confusing it is.
Well, do you think this bill signals anything at all? And I should say, thank you so much for saying, for those kind words earlier. But do you think that this bill signals anything at all? I mean, perhaps the fact that the bipartisan support for the bill, does it highlight the recognition of the growing importance of DeFi in the financial landscape and the need to regulate it to safeguard against illicit activity? Does that come about to your mind at all?
It does. So, I mean, there are multiple pieces, some of which you touched, right? If you're talking about KYC and compliance, then that would be a very fine way of saying, hey, what is the KYC associated with it? There are already products on blockchain, which like Synapse, one of our portfolio companies, which has been doing on-chain KYCs, right? If you are talking about regulation around how institution can adopt it, and does institutions, like let's say banks who have money from different other entities will have to make some disclosures to their existing investors, that makes sense. Right now, what you're just saying is, oh, VC firms are going to be responsible for DeFi. What does that even mean? So if we're going to have a conversation around regulations, conversations around KYC, within regulations, if we're going to talk about clarity, this is what you can do and this is what you cannot do, with that much of clear guidance, right? While you're saying we can be liable for something, but at the same time, you continue to pay taxes for everything, right, wrong, black or white, and be responsible for it. It's a very confusing statement.
So obviously you think this is confusing and things aren't clear right now, but do you think this new bill could have the potential to directly impact venture capital firms like yours? And how will it affect overall investment strategies, especially those in the DeFi space?
As of now, we are not changing anything. I just got back from ECC Paris, which is one of the biggest conference in the space. I hosted a big, very exclusive VC investor lunch. Didn't hear a single person talking about it from the VC industry, US investors, European investors. I think the thought is, oh, there is another news from SEC without any clearance. Let them go through the hoops. Let them have the conversation. Maybe year, 2 year later, let's see how does the government really come around it. That's when we know that, okay, there has to be steps taken by as a firm. As a firm, when we are responsible for so many people, we just can't make a quick judgment or a big decision on our investment strategy based on a news which doesn't really have any leg.
Speaking of the SEC, earlier this month, Ripple scored a partial victory when a federal judge ruled that the crypto company did not violate securities laws when issuing XRP to retail investors. That decision marked a blow to the SEC's efforts to regulate the crypto industry. What do you think the implications of that ruling are for the industry?
So I feel like it was a very interesting take by the court, because at one point they said that, oh, the Ripple tokens sold, XRP sold in a pragmatic way, which is through the exchanges, does not make it a security. But the the association Ripple itself selling it to institutions does make it like a security sale. I think it's a very different way of looking at the product, which is very interesting because so far the conversation has always been, is the parent entity like Ethereum Foundation or Solana Foundation, are they decentralized enough? Are there enough validators run by itself? That was the last time how the decision on Ethereum, whether it's a security or not, was made. And I think this time we are looking at it how it is sold to be defined, whether the same token could be deemed as a security sale or to be deemed as a retail and not a security sale. That's what I took away from, which goes back to the principle of early ICOs, that how do you decentralize the sale of the medium? Is there an incentivized model associated with it, or is it purely for speculative model? So I feel like going forward, there are certain pieces, both sides actually, at least in public, came out and touted it to be their win. SEC touted the institutional sale part as their win, and Ripple basically came and took the claim that pragmatic sales are their win. But it does open up a very middle ground, as I was talking about, which is not exactly what Crypto World wants, which not exactly what SEC wants, but a right definition for all of us to move forward.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.